Hey everyone, and welcome back to the Noob Selling Options channel. Today, we are breaking down a massive, deliberate move we just made in the portfolio. We are officially leaving the AI fortress. We've decided to take a highly calculated shift, pulling our capital out of those mature tech equities and going on the absolute offensive with crypto. So let's just dive right into exactly how we are positioning for this next leg of market growth. To kick things off, I want to anchor us with this thought. This portfolio rotation represents a deliberate, calculated shift from mature, high-yielding AI enterprise assets into asymmetric digital growth engines. The absolutely crucial thing to understand here is that this is not us panic selling our tech stocks, not even close. It's actually a highly convicted strategic pivot. We're simply locking in our massive gains from traditional technology and moving that exact capital to hunt for true exponential alpha, while the broader market is going through a pullback. So here is our roadmap for today's explainer. 1. Leaving the AI fortress. 2. The trade by the numbers. 3. The 70-30 barbell strategy. 4. The BSL yield advantage. And finally, number 5, buying the blood. Let's start with section 1, leaving the AI fortress. There is a really stark contrast between how we were positioned yesterday versus how we're positioning for tomorrow. On one hand, we've had what I call the AI fortress. These are your traditional equities, companies like Meta and SoFi. They give you excellent defensive stability, really mature cash flow, and they've been incredibly good to us. But we are taking those hard-earned profits and moving over to the crypto offense. By grabbing premier Layer 1 digital assets like Bitcoin and Solana, we are literally shifting from a defensive, protective posture into a hyper-growth offensive one. Because right now, at this exact stage of the cycle, this is where that massive asymmetric growth actually lives. Moving right along to section 2, the trade by the numbers. Almost $5,000, $4,933 to be exact. That is the total principal capital we deliberately fired right into the teeth of this recent market flush. We didn't wait around for the dust to settle, we just put this capital straight to work. I want to show you exactly where every single dollar of that went. Total transparency. We actually executed 2 separate limit orders. First up, we snagged 150 shares of the Bitwise Solana staking ETF, ticker BSOL. We managed to get a phenomenal execution price of $9.24. Factoring in a tiny 34-cent fee, that piece cost us $1,386.34. Second, we secured 100 shares of the iShares Bitcoin Trust, ticker EBIT, at $35.47. With a 73-cent fee on that one, it comes out to $3,547.73. Add the whole shebang together, and our total capital deployed, including all fees, is exactly $4,934.07. All right, section 3, the 70-30 barbell strategy. If you take that total principal outlay we just looked at and break it down, our allocation to IBKIP represents right around 71.9% of the deployed capital, which means our BSOL allocation makes up the remaining 28.1%. So basically, this capital deployment gives us a roughly 70-30 weight distribution between Bitcoin and Solana. It's a highly deliberate baseline split that serves as the absolute foundation of our barbell investment strategy. So, why does this specific barbell setup work so incredibly well? Well, on the heavy end of the barbell, we have our 72% chunk sitting in IBIT, which tracks spot Bitcoin. This is our hard anchor. We are tethering the vast majority of our cash to the undisputed king of digital money. It's our macro store of value, our structural hedge against the traditional system, and it's riding that massive, unstoppable wave of institutional adoption. Now, on the completely opposite side of the barbell, that 28% in Solana via BSOL, that is our high beta engine. It's our rocket fuel. When the crypto market inevitably turns bullish, Layer 1 networks like Solana almost always outrun Bitcoin. Why? Because it captures pure ecosystem momentum. It's got explosive retail volume, massive decentralized finance activity, and blazing fast transaction speeds. So the barbell perfectly balances the safest digital gold in the world with the absolute fastest growing utility engine on the block. That brings us to section 4, the BSOL yield advantage. Going with the BSOL ETF wrapper instead of just buying spot Solana is honestly a bit of a cheat code. See, this ETF doesn't just sit there lazily tracking the price. It actively stakes its underlying tokens natively on the network. By doing that, it quietly scoops up validator rewards, which usually hover around 6 to 7% gross. And step 2 is where the magic really kicks in, compounding growth. Those staking rewards accrue directly into the fund's net asset value. Think about what that means for a second.
Even if the crypto market does absolutely nothing and trades completely sideways for months, your underlying share value is still quietly growing because of that structural yield. And for step 3, you get all of this inside a fully regulated, hassle-free brokerage account. You literally get a yield-generating utility asset without ever having to mess around with self-custody wallets, seed phrases, or running your own staking nodes.
And finally, Section 5, buying the blood. You remember those exact execution prices we talked about earlier, right? Grabbing IBIT at $35.47 and BSOL under $10 was absolutely no accident. We intentionally scaled in during a violent market flush. We literally sat on our hands and waited for these specific assets to hit deep, multi-month support bands. By pulling the trigger when we did, we capitalized on temporary structural mispricings in the market. Look, rotating your profits out of safe, mega-cap tech stocks to aggressively double down on premier digital assets during a scary dip, that is the textbook definition of high conviction. We secured the best assets in the world at a massive discount. And that brings us to the core takeaway for this entire explainer. Listen closely to this. Taking profits on traditional tech to absorb high-conviction digital assets at a steep discount is exactly how you build generational outperformance. Let the compounding begin. Seriously, that is the core mission statement of this entire portfolio rotation. We are dramatically optimizing our timeline for long-term wealth by being greedy and aggressive right when the rest of the market is fearful. So now I want to turn it over to you. What is your personal dip buying strategy for building generational wealth? Are you playing it safe and anchoring heavily in Bitcoin? Or are you chasing those face-melting gains with high beta assets like Solana? Let us know down in the comments. I really love reading through your different strategies. And hey, if you found value in this explainer today, please remember to smash that like button and absolutely make sure you subscribe to the Noob Selling Options channel so you can follow along with this portfolio journey. Thanks so much for hanging out with me today, and I'll catch you guys in the next explainer.